All right. Well, thank you to the Marinade team for convening everybody. It's been a great morning so far. I'm very privileged to be here with my boss and colleague, Lily Liu. So Lily, RWA is so hot right now. Why?
Well, because I guess people are tired of 100x perp trading their meme coins, so they've got to move on to something else. Well, $100 trillion of assets. And I think the vision for crypto from the very beginning is global financial markets infrastructure, right? This is not just markets for degens. This is financial markets and financial access for everyone so that everyone who now has access to information on the internet, and we saw how cool and transformational and touched every corner of the human experience practically, how impactful that was. And I think what got me into crypto from the very beginning is this idea that you could kind of do that same thing for enabling global sort of direct financial markets access. And it takes a while to build that infrastructure. So Bitcoin kind of articulated the broader direction. Ethereum did a lot to actually make that much more tangible. And I'd like to think that we as Solana are continuing to build upon that and actually make this truly production accessible to anyone on the internet.
So something you say sometimes is meme coins are all value. All price and no value. And something like a money fund like BlackRock BUIDL is all value and no price. It has a NAV of $1. What do you mean by that?
Yeah, so I think that over the last 10 years, there's been a lot of, 10 years ago, there's a lot of conversation around blockchain, not Bitcoin, and things got to be permission because that is the way present day compliance frameworks, that's the easiest thing that's kind of blockchain-ish to go fit into existing compliance frameworks. But then the thing is that you can issue assets in an environment where you don't have a diversity, propensity, or just quantity of counterparties and or liquidity. So then you can be in the situation where you have an institutional asset that has value, but it cannot command price because there's no market around it. And I think blockchain infrastructure is ultimately about being markets infrastructure. And it's ultimately about unifying 5.5 billion people and the wealth of 5.5 billion people. And then that's like the max liquidity situation under which you can create a market around a whole variety of assets, and that's going to span meme coins all the way to RWAs, right? Now, RWAs are anything but monolithic. They are, in totality, like $100 trillion, and there's incredible amount of differentiation between a HELOC, a money market fund, an equity, credit, structured products, right? There's a huge amount of diversification in there. So I think we're using that at best as shorthand today within the crypto world when we kind of think about this as one asset class that's anything but. But then we've, as an industry, I feel like we've been stuck on these two parts of the spectrum right now, the two ends of the spectrum. One is assets that command endless price. Meme coins, for example, with literally zero value. They're not even hiding that, right? Even Bitcoin is more about price than value. And the value has been sort of I guess, collective social belief is the value of Bitcoin that has been imbued over time. And so all of crypto native stuff is sitting out here in terms of lots of price relative to value. And then the institutional stuff up until more recently, before it really started to come natively on chain, was a lot about value. Yes, there's inherent value in home mortgages. There's inherent value, of course, in a money market fund. There's inherent value in your private equity LP position, but there's no market around it, so it cannot command price. And I think the next thing that that we're going to start to see as more RWA comes on chain, it becomes more tangible, is that some RWA is going to trade frequently and others are not, just because that's the nature of the asset. You know, if you have an LP position, that's just not going to trade every day. That's the type of thing that will change hands once on maybe even a year's time frame. But then the utility of a blockchain, I think, will be to enable collateralization of a wide range of RWAs. And I think that's probably how a lot of RWAs will actually have blockchain add value to them and for them to add value to blockchain. But then I think the relative value to a blockchain of various types of RWA will essentially be more marked to its LTV rather than its NAV.
So you touched on something there I want to go a bit deeper on. You talked about, of course, one of the exciting things about blockchain and RWA is this idea of democratizing access to 5.5 billion people. I think one of the things that isn't as widely discussed, but perhaps even more important, is increasing access to the supply side. So making issuers able to bring their assets to those 5.5 billion people.
Absolutely. So for those of us who've been in blockchain for a while and been through a couple of narrative cycles, there's been a recurrent narrative, which I think is really powerful, around financial inclusion. And that idea being now anyone can be on the internet, have access to stable coins, which in most cases is a much more desirable form, a much more desirable store value / medium exchange than highly inflationary currencies around the world. Something even like right now, there's something like over 1 billion people that live in economies that have double-digit inflation, right? And every single one of those folks would prefer to have a dollar, and a digital dollar, no less. And then there's been kind of the extension of that financial inclusion story to, well, if you have access to better assets, you can also have access to better investment assets. And so if you look at in a place like China, where they have incredible fintech innovation, and they have these incredible kind of consumer platforms where you can buy everything, do everything, and then also invest. But the thing is that what were you actually investing into? Well, 10 years ago, you could invest in asset management products, but you're essentially funding, Evergrande's new development in a fourth-tier city. And so just like the underlying quality of that investment asset is, not necessarily global A tier. And that's something that if you have a global market for investment assets on the buy side, I think it's easy to understand intuitively why that's very powerful. But on the issuer side, right, I guess people don't talk about capital markets for issuers as much because there's no heartstrings there necessarily. But I think there should be. And I think one of the themes that even administration has been talking about a lot is how to make the economy work for Main Street and not just for Wall Street. And so small, medium businesses, right? And small, medium businesses, even really high quality businesses, are locked out of the IPO market because the IPO pipe is this big. And so who's getting locked out of that? Well, anyone who is not a bona fide US business, right? Really the best companies overseas, even they have to oftentimes VIE and try to, somehow get into the US capital market. So that's like an even smaller pipe. And even for our own companies, if you do an S1, it's 6% off the top, right, to your very illustrious set of professional advisors. And then on top of that, just the cost to really IPO is something like if you raise $100 million, you're paying 10, 15 million just to go through the process. And so that's like a pretty big fixed cost for a number of people, or if it's a pretty high fixed cost base for people to be able to overcome to have access to liquidity. And that's one of the things that I think crypto can do to expand sort of the sell-side access to capital markets as well. And that's the other side of the market, right? So it's inclusive on the buy side, inclusive on the sell side. And part of that is because you can have greater operational efficiencies. There's going to be a lot of battles on that front in order to gain acceptance of new financial infrastructure to fulfill what's typically done in a much more traditional way. So that's something we're working on. But I think that is true for blockchain, but it's also true generally in technology. That in technology, why are these things really valuable? And the reason why things like even the whole Uber economy 10 years ago is so valuable because it's always been around technology unlocking long tail buy side and sell side ends of the market and being able to match them, right? So it's revealing new supply and demand and being able to match it efficiently. And I think that's what crypto does for capital markets.
Yeah, perhaps internet capital markets, you could say.
You could say that too.
So with internet capital markets, you mentioned Bitcoin, of course. I'm sure many of us here are familiar with Bitcoin, have some Bitcoin. Of course, there's thousands of new tokens launched every day on Solana and other blockchains, many of which have price, some expressly have no value, as you mentioned. And then there are something like 30,000, I saw a statistic in the Wall Street Journal the other day, 30,000 pre-IPO private companies, 30,000. There are fewer companies listed on US public equities exchanges today than there were in 1970, 50 years ago. And so how do those 30,000 companies get liquidity? They have to get liquidity somehow for early employees, founders, investors, and so forth. And so, do you think that happens on chain and on Solana? And what do you think the timeline of that is?
I think it's going to be sooner than we think. Ideally, we're working on getting that done this year. And I think that equities as an asset class is something which is in the middle of that value and price spectrum. It's something that has value and can also command price. And so that's probably the most sort of suitable asset class within that 100 trillion of RWAs to blockchain. People will get out of bed and trade Tesla all day long, right? And there's a lot of people who do that, whereas people are not necessarily going to be doing that for mortgage-backed securities. So that's kind of that part of RWA, which I think is going to be a really great fit for a very good fit for blockchain. And then also enabling capital markets access, right? Something where if you look at what the internet did, it took everyone from now anyone can be a content consumer of infinite content anytime, but then it also took quite a number of people who were content consumers and also made them content creators. And I think that's going to also happen with asset origination, which is not to say everyone should be an asset issuer. Obviously, there's that's maybe a little bit too wild, but I'm talking about things like a mine in like a gold mine in South Africa, right? Could they issue a gold token? Like that's something that is not possible at all today. Which is not to say that's necessarily going to be $100 billion asset. But then is there some sort of long tail type of issuance capability that gets unlocked because people have direct access? In addition to the corporate equity that I think we're all very familiar with, but then I think there's even a longer tail on that end that can be contemplated, should be contemplated. And when we talk to folks outside of the US, I think this is, there's like three things that people are always excited about. One is certainly on developer talent formation, and attracting talent to the economy. Okay, so the human capital side. And then it's also, how can my companies and the assets of my country get direct access to capital markets is always the number one thing that people talk about.
So large TradFi firms like BlackRock and Fidelity are looking at both sides of the market. They're taking native digital assets like Bitcoin and Sol, and they're bringing those to traditional brokerages, allowing for institutions and retail to access those products, and they've been tremendously successful. I think IBET is the most successful ETF in the history of capital markets. They're also, though, innovating, and BlackRock has issued their tokenized money fund BITL natively on Solana. They seem to have had much more success taking digital assets through the channels they already have and distributing those to retail and institutions through the brokerage. They've had less success, distributing RWA on chain. Why do you think that is? And what do you think needs to change for them to have more success on chain?
Well, one thing to note, first of all, is in Europe, where you can have staked ETPs, the largest product is the Solana staked ETP. And it's larger than Bitcoin, and that's issued by 21 shares. So I think their staked ETP product is 1.2 billion, something like that, and then Bitcoin is like 850 or 900. So shout out to our host Marinade, because being able to support a staked product is something that I think will be even cooler for the market. As an aside, so hopefully we can, as an ecosystem, help make that happen at one point. But then I think that, just the nature of the asset. Bitcoin is a hot asset. It's a sexy asset. It's a unique asset. And tokenized money market funds, which is the primary RWA that's been tokenized and brought on chain right now, is in a much more competitive space. And so how do you make a tokenized money market fund more attractive, more accessible? Well, first of all, it's permissioned, it's KYC'd, so it's a little bit harder to get. It is, of course, better than $1, but it's very specifically about 4.5% better than $1. And so that is, it's a bit of a value proposition, but then it has less utility than a fungible stablecoin within crypto. It's not typically used as a base asset or a collateral asset, not yet. And I think once those things happen, then there will be more demand sinks on chain for RWAs, starting with money market funds, and also it will very rapidly expand beyond that, because right now that's just being used to test infrastructure. So then, I think the value that crypto brings to RWA is increased distribution, but then also increased ways to use those assets. and because otherwise it's actually a cost to go, do tokenization, to build this new infrastructure, to go have these discussions with lawyers and regulators and all the rest of it. And so the value add, hopefully on the other side, is more dynamic ways to use these assets, composable finance, right? That's always been one of the rationales for crypto to start with, and then also right now we're at about $3.5 trillion within crypto, which I think is a fraction of what it will be eventually. And that's largely crypto native assets. So it's entirely crypto native assets. And so helping that group also diversify away from that, right? Even the most sort of crypto pilled person is probably not holding 100% of their wealth in Bitcoin. And even if they've been part of this run up, are happy to diversify 10, 20% out of that. So, that's hopefully where I think they come together. But I think part of the value proposition has to be increased utility on chain.
So there's been a lot of announcements regarding the Solana ecosystem this week. It's hard to keep track of them all, but regarding utility of RWA on chain, I did see that both Camino and Drift have vaults to loop the Apollo Accred private credit product on Solana. Is that the type of utility you're talking about?
And shout out to Nick for making that happen. No, seriously. Truly, because up until now, there's been RWAs kind of sitting over here, right, on distinct platforms and sitting away from the millions of users that are doing their thing on DeFi. And that's exactly the type of convergence that I think we need to see. And I also think is happening and will continue to happen at tremendous pace on Solana, because this is where these worlds are starting to come together. And so absolutely, right. I think that there has been an asset quality issue within Solana, because in order to create a native asset, yes, you can do that quickly, but up until RWA, it was hard to do. It was hard to have sort of assets that have inherent value and quality and a diversity of them in crypto, because of all the things that have yet to be put in place. So I think it's fantastic, and that's one example of, I think, multiple things to come, and is also something that even us who are sitting in the U.S. have access to financial products and have access to probably a wide range of assets. Even all of us, right, probably own, if you own $10,000 of Apple stock, right now, if you wanted to get a loan against that Apple stock, you just can't do it. Who's going to lend you $3,000 against your 10K of Apple stock? Nobody, right? But in crypto, you can do that within seconds, and that's already increasing utility for even those with the greatest degree of financial access, which is probably us in this room today.
So we have 2 minutes left. Maybe let's talk a little bit more about on-chain Apple stock. So one of the things that makes the looping of the Accred product in DeFi possible is minting permissionless version of the Accred token. So basically what happens is you have to subscribe to the fund via Securitize, the Apollo private credit fund on Securitize. You can then, through a UI on Securitize, borrow against your Accred, and they'll basically mint Accred, which is the Securitize Accred, which is a permissionless token that you can then take in DeFi and put it in one of these looping vaults. I think we've now begun to see something that we're calling tokenized twins, where you're taking some portion of the bundle of rights that are typically conferred within equity, not necessarily all of them, like inspection rights and voting rights, but conferring things like price and yield, which are the two most important things, at least from a DeFi perspective, and enabling tokens to be traded more freely and purchased more widely on chain. And so I think with Apple in particular, you've got like Ondo, who has announced their on products, which will be like on AAPL, which is the ticker for Apple, which you'll be able to buy permissionlessly on blockchains like Solana soon. What do you think that will do for the ecosystem?
I think that is the most desirable asset class, or TradFi asset class, to bring into crypto. And I think with that, so first of all, that's going to largely be available to non-US, which, as an aside, is kind of weird that the U.S. is protecting Americans by restricting Americans from having access to American products. Like, that's a separate conversation. And going through a lot of energy to like be compliant with preventing Americans from getting American products. But then you could also say Americans already have access to those American products. So incrementally, okay, fine. And so it's going to be demand from the rest of the world, right? If you can buy $100 of Apple stock, of Tesla, and eventually many more assets, I think it's going to be huge for crypto and really demonstrate that crypto is not just for that kind of shady speculative stuff that looked like the internet was originally for questionable types of content, and it very quickly graduated from that. So I think that is really on the cusp. We're really excited about it. If you come to Accelerate tomorrow, we'll have some announcements related to equities. So I think that is like the killer asset class, but not even just sort of taking existing assets and making them available. But then what we'd like to do later this year is IPOs on chain, fully native IPOs, bona fide IPOs, but where the underlying infrastructure for that is, if you think about what a ledger does, it kind of acts as a transfer agent, right? Kind of acts as a clearing agent inherently. So that's, I think, frontier for us. And more things to come.
All right, a little alpha from Lily. I think we're at time. Thank you so much, Lily, and thank all of you for joining today.